was the swing high which we registered, and there is a good chance that Sanofi India will attempt to aim for the levels of 90-100 plus very soon. So I would take a bet on the buy front at the current rates, even on dips. If in case the stock gives us an opportunity at 8400, it will be a good buy. Your stop loss will be below 7900, and your target area somewhere works out to 9400 with a time horizon of 1.5 to 2 months.
Thank you, Akshay. So good buy for the next 1 to 2 years time frame. But what are your stock picks for our investors today?
Yes. So the couple of stock picks which I have for the investors. First is in Shriram Transport Finance. The stock already has moved up well since the morning trades, and today, in fact, if you look at the charts, it is a breakout on Shriram Transport Finance. One more positive development which I see on this stock is that it's been included in the Nifty 50 index from 28th of March. So by Shriram Transport Finance, positional maybe for the April series, you will have targets of roughly around 2600 plus, because I think 2510 was the target initially which I had put up, but I think we need to revise this target. So 2600, 2620 is the upside which you can consider in this stock. We are trading at 2527 right now. Now the new stop loss on this trade would be 2445. So Shriram Transport Finance, the first trade on the buy side, and the second trade here would be UPL. This is the stock which I consider might be a reversal candidate. It's been out of the Nifty 50, but if you look at the broader chart pattern, it's highly oversold. There are indications on charts that you will have a reversal in the making, and 500 plus targets would be on in the month of April. So buy UPL for targets of roughly 498 to 510. Keep a stop loss of 464 on this buy trade.
All right, UPL and Shriram Finance on the radar of Akshay Bhagwat for the short term. Perhaps bet on these stocks if you are looking to trade in the markets over the next couple of weeks. Akshay, great insights from you as always. Thank you for joining us here on News 9.
Thank you.
But with that, let's slip into a short break. On the other side, Avinash Gorakshakar, Director Research at Profit Mart Securities, joins us.
Luxury is now becoming a need rather than something that you aspire to be. So that is adding a lot of fuel. Obviously, government has played a vital role in it.
In a city like Mumbai, a luxury home may be something upwards of rupees 10 crores. In city like Delhi, again maybe something upwards of 8-9 crores. But in Bangalore, we typically define a luxury home, anything which is upwards of about 3 crores.
It's a combination of increased wealth, availability of more luxurious homes, and simultaneously the overall economy doing better.
Welcome back. You're watching First Stick here on News 9, and the markets, they are staging a strong recovery. Nifty as we speak has moved above 22,400 mark. In fact, it's almost flat now. It's just down 0.06% as we speak, and very close to the day's high. Sensex is also charging towards that 74,000 levels, and the broader markets, I mean, the recovery continues over there. Both indices, they opened on a flattish note. The mid cap index was slightly in the negative, but both indices are driving the markets higher. The mid cap index is up 0.1% as of 10:15 a.m. this morning. It is above 49,500 as we speak, just in a just a touching distance away from its record high levels. The small cap index also, the recovery, I mean, pretty much continues over there. The index is now up 0.7% and has reclaimed 16,000 mark. But if you look at the sectoral indices, I think it's there are two factors that are driving this recovery. First, it's the HDFC bank stock. It opened with a cut of about 0.5%, but as we discussed with Akshay as well, the stock is seeing a bit of a breakout. It had been stuck in the range for the last couple of months, but we have broken above it. In fact, there is a sharp recovery in HDFC bank as well. So keep an eye out on HDFC bank. And another pocket of the market that is helping in the recovery is your IT pack. Both IT stocks, especially the large cap IT stocks, including TCS and HCL Tech, they are positive contributors to the market. Both stocks are up around 1.5%. So perhaps keep an eye out on HDFC Bank and your tech stocks, your large cap tech stocks. If there is a recovery, perhaps these two pockets of the market will provide that impetus. But joining us in the studio now is Avinash Gorakshakar, Director of Research at Profit Mart Securities. Thank you for joining us here on News 9. Avinash, season greetings to you, your team and your family. And the markets have had a strong run recently. I mean, but the global cues, they have been a pain point which is leading to some bit of a correction in the last couple of sessions. But one pocket of the market, Avinash, continues to do well, and that is the non-banking financials. I mean, look at the stocks in this space. They had been under pressure in the last few months amid RBI curbs, but in the last couple of weeks, stocks have risen by almost in double digits. Some of these stocks are up almost as much as 10% in just a matter of 5-6 sessions. What do you think is the reason behind this reversal in the sentiment, sir?
Yeah, first of all, good morning, Suresh. My sense is, I think NBFCs are now again in the limelight, followed by banks, largely because, now the credit policy which is going to be out on the 5th of April, I think is going to give some indication about the kind of trajectory on inflation and interest rates going ahead. I think the market is expecting that possibly if there is a rate cut in the month of June or July, then I think, to a large extent, these NBFCs would find that their cost of funding would obviously get more competitive. It would lead to a little bit more margin accretion. Because, on ground, what we are finding is that demand has now reached almost pre-COVID levels. If you look at most of the larger NBFCs like Bajaj Finance, or typically even Shriram Finance, or typically, larger, companies which have got decent AUMs and which have got a larger geographical base, I think there's been a rigorous appetite again to go for consumer durable financing, small item financing, and that is actually driving a lot of growth. So my sense is that you could see a lot of companies, once they declare their March numbers, their commentaries could be quite encouraging. And I think we could probably see a good amount of re-rating in some of the larger as well as the medium-sized NBFCs, despite the fact that competition is increasing. But I think if the rate cut happens, Suresh, I think that would be a key, kind of driver which the market is looking forward. So I think markets are anticipating that maybe this time the rate cut may not come in this policy, but at least in the month of June or maybe July, hopefully, the rate cut cycle has to begin. And if it starts, then it would be, elongated for a fairly long period of time. And that would obviously improve the margins, that would improve the business growth for most of these NBFCs, which are now, showing decent signs of an uptick on the business side also.
All right, NBFC stocks could continue to recover because I mean at the end of the day they do provide financial service for the unbanked. But another particular stock in this space, Paytm, is in the news. According to media reports, it has resumed lending activities after a temporary pause of almost 2 months, starting with merchant loans in partnership with existing allies. Now back in March, it had tied up with select banks to continue UPI service. I mean, Avinash, coming to you, is this the future for Paytm, a third party service provider? If so, how does it impact their earnings?
No, I think, Suresh, we yet have to understand the full impact of the RBI ban, because unless and until the RBI ban is not lifted, I would believe that, the kind of commentary which the company had given earlier, that by September 24, they would become EBITDA positive. I think that remains a key challenge. And I think post-March numbers, once the fourth quarter numbers are released, the company holds an analyst call. I think one would definitely like to know from the management that what is now the near-term strategy the company management is looking at. My sense is that these are small interim kind of measures which the company is doing. The bigger issue is that the RBI ban has to get lifted. Only then we could see profitability getting back into much more a decent kind of curve. So I think these kind of news flows are unlikely to re-rate the stock in a big way. I would still reiterate investors that it's better to wait for the management commentary and some more clarity to come in, because these things are not going to overall improve the business structure as a whole after the RBI ban. So I think it's a wait and watch as of now. We would not be comfortable to buy even at these levels. We'd prefer to wait for at least a couple of quarters before the entire dust settles down and we see a clarity from the management side that business is back to normal. Because till that time, we are going to see a lot of uncertainty on the Paytm stock.
All right, and Avinash, you said that RBI could perhaps lift the bank on the payments bank. Is that a possibility? Because from what I am reading, I mean, payments bank is essentially dead.
It is. It is. Actually a fact. But then my sense is, we don't know what exactly has transpired behind that, and what kind of measures will RBI take. Will they finally cancel Paytm bank's license altogether, or will they allow them with some restrictions? Now these are things, Suresh, which I think nobody can answer at this point of time. But I think you need to give at least another couple of quarters before you could see that reasonably that business gets back to normal and resumption of business starts. As of now, most of the investors who have invested in this company are now completely helpless, because they actually don't know on the ground what is happening. And I think that's why the fourth quarter numbers and the commentary and the con call which would take place is going to be very important, because a lot of investors, specifically the larger institutional funds and investors, would definitely like to know what is the management's thought process and the strategy going ahead. Because see, management is defending obviously all these issues, but clarity has yet not come.
Good morning, Mr. Gorakshakar. Now it's the first month of the new financial year, and there are as many as 15 companies that are coming out of their lock-in periods, whether it is 1 month, 3 months or 6 months. Now, going by the textbook behavioral patterns in these matters, there will be a lot of selling pressure on these stocks and in the markets because of that many stocks coming out of the lock-in period. When I look at their performances in the recent times, whether it is RK Swami or Mukka Proteins, most of them are in the negative in the last 5 days at least. Some of them, give or take, Crystal Integrated or Plaza Wires, most of them are not performing too well. Is it because the big players, anticipating a selling pressure, push these stocks into a bearish sort of zone just to avoid the selling pressure in these times? It's a sort of an academic question for you.
No, I think normally, when the lock-in period opens and the share has already been traded at a significant premium, then I think obviously, most of the anchor investors, who have that lock-in, plus, other investors who have invested, then obviously they try to encash their gains in the market. But I think, assuming that most of the stocks which you mentioned are already in the negative and they are below the IPO prices, or some of them are already into loss, at that point of time, I would not be surprised that some of the funds may consider, holding on for some more time. They may not try to book a capital loss immediately. But my sense is that typically on an academic side, whenever such lock-in opens, there is some temporary pressure on the stocks, because a lot of floating stock takes time to get absorbed by other investors. And I think you also need to understand that who are the new buyers who actually absorb this floating stock. If the floating stock goes purely to retail, then there is hardly any valuation. But if it is some new fund or some new FI which gets in, then I think some stability in the prices of these stocks do happen. But yes, when the lock-in happens and it opens, at least for the next 1 or 2 weeks, you are bound to see some selling pressure, which is a normal customary thing. So that is something which no investor can avoid. So you got to go with the tide.
All right, an interesting point that you made over there, Avinash, that who absorbs this extra float? It's the retail investors, or a big player comes in and swoops in that what's being offloaded by existing shareholders. But on that note, we'll bid you goodbye and see you very soon. Again, season greetings to you and your team, sir. But before we wrap things up, let's look at how the markets are doing, because they have pretty much clawed back all that was lost in the morning trade. I mean, look at Nifty. It's now flat, trading with a positive bias. We are at 22,460 mark over there. Sensex is also, by the way, moving towards 74,000. It's just about 60 points shy of it. The mid caps and the small caps, I mean, the story continues over there. The mid cap index is up 0.14% as we speak. And yesterday it was just about 0.5% away from its record high levels. So perhaps if the recovery continues in the broader markets at large, maybe we could get there. But currently we are about about 150, 200 points shy of those levels. And the small cap, it's the strongest segment of the market. It's up 0.72% as we speak. Has reclaimed 16,000 mark after a gap of almost 1 month. And good to see volatility also comes down, because we are today is the FNO weekly expiry for Nifty bank contracts. Tomorrow will be the expiry for Nifty contracts, so there will be some bit of a choppiness. Also, we are hearing a lot of divergence in commentary from as far as the global cues are concerned. So the markets are on the edge, but it looks like Indian markets are climbing all walls of worry and continue to etch their own path, and that's a path of recovery, because look at how the markets are doing. Elsewhere, everywhere, it's a sea of red, but our markets are powering on. And this morning, again, as I mentioned earlier, it's two pockets of the market that are driving the markets higher. First is your tech stocks. Tech stocks again had been under pressure, but this morning TCS, HCL Tech, Infosys, all of them are green, up 0.5% to 1%. And HDFC Bank, I mean, it has broken out of that range. It was stuck in the last couple of weeks, and it continues to move higher, and it's up 0.5% as we speak, and it's actually the biggest contributor to the upside for Nifty. But on that note, it's the end of this edition of First Take. We'll see you at 4 p.m. on Last Take. Thank you for watching.
How do